Hello and welcome to Dinis Guarda Cities ABC Open Business Council series. We are a fast-growing YouTube podcast thought leadership channel focused on profiling the global leading inspiring people, CEOs, authors, technologists, and academics that are changing and creating new solutions for the world we live. We highlight ideas, products, platforms, inventions, and software, books, and solutions to the multiple problems we are facing nowadays, especially when it comes to our cities, our countries, our nations, and our as well ecosystems where we are, especially more and more digital ecosystems. And we are as well looking at specifically areas like how we are coping with the fourth industrial revolution, concepts like the Society 5.0, and as well all the areas of digital transformation, fintech, AI, blockchain, and a lot of different things that are critical for our days. In this platform, we've been actually profiling a lot of different global players, governments, ministers, and as well, on our focus is mostly try to make sure that we look at people first of all. So this podcast series are produced and distributed on our platform citiesabc.com and openbusinesscouncil.org and syndicated in the platforms intelligenthq.com, fashionabc.org, edgethink.com and tradersdna.com. So I would like to welcome today Max Lautenschläger. I don't know if I spell it correctly, but Max will tell us. So Max is the co-founder and managing director and COO of Iconic Holding, a global crypto asset manager that started his career as a management consultant where he advised Fortune 500 companies for the steel, utility and retail industry on topics like digitalization, project management and IT integration. Max has transitioned from private equity and asset management group with $40 billion under management and assets, then joined a fintech company Builder where he built several alternative finance startups from scratch together with management team. He holds a BA in international management, an MBA, is Harvard educated and completed the Chartered Alternative Investment Analyst designation, and additionally serves on the supervisory board of MLP, Germany's biggest independent financial advisory group, and is personally invested into several startups and as a business angel as well. Welcome to our series, Max. You have much more in your profile, but I try to highlight a summary. I would like to hear a bit about your history. So German, but as well Harvard educated, and been working in big corporations, but as well in fintech and startups. So a bit of your history, your education, and where do you come to get where you are right now?
Yeah, probably I start with school then. So I was not a very good student. Actually, my degree back then was quite bad. And I thought about, okay, what can I actually do? And I thought, okay, studying business is never a mistake. My biggest passion actually was more for natural sciences like biology, nanotechnology, genetics and stuff like that. But I thought, okay, that's my passion, but I could always combine it with a business, for example, later. This is why I decided to study business. Then I finished my bachelor degree and thought, okay, what is out there where I can really learn something, where I can really optimize myself, my working attitude, where I can get insights into the industry and what kind of things are happening. And this is why I started as a management consultant and looked in topics like digitization and IT integration, as you have already mentioned. And then actually on a personal level, alternative finance became very, very interesting to me. So I then took some time and reflected like the last years when I was working in consulting, if this is actually the right road for me to go. And I decided it isn't. I have to do something in finance and in fintech. I think the world is changing. And this is how I ended up in the fintech space, more or less.
So I want to ask, although you said you were not a very good student, you actually ended up in Harvard and you had an MBA. So you did something very good. I would like to hear a bit about that because it's interesting. I think especially people listening to us, we have people from all over the world, actually a lot of people from Germany as well. But I'm interested to understand from that trajectory of your interest in different areas to come back to alternative finance, to as well to the startup and technology world. How did you went through this? Because I think the devil's on details, but as well as interesting for people listening to us, especially students or business schools people, but as well any other entrepreneurs. But I think we all learn with our experiences.
I mean, when I mean school, I actually mean high school. So I was very bad there just because, I mean, there are so many things that I was just not interested in. Yeah. And I mean, I think for me, the most important thing of my life is to evolve as a human being. And I think this like soft skills, you don't learn them at school. You learn them when you are out with friends. You learn them when you are drinking, maybe at night. You learn them when you talk to people and when you have a good time together. And I think this has always been my primary focus. Um, it actually changed me because you already mentioned, yes, I went to Harvard and I did my MBA at a very good business school. It changed with my working attitude, I think, because when I started in consulting, I saw, okay, now you have to work like 12, 14, 16 hours a day, and you have to get certain things finished. And I think this was an extremely important point in life where I completely changed my attitude and my working ethics to a very positive way.
Fantastic. So one question I have that I think it's interesting for me. I'm very, so I am a bit of a mixed culture because I'm Portuguese, a bit French, and as well I've been living 5 years in Sweden and now 10 without interruptions, actually between Sweden and Denmark, and now 10 in the UK, in London. So I would like to hear a bit about that because the German culture is very specific. It's very academic driven, especially the business world and the financial world. Most of the people in big positions in Germany have a master or an MBA or actually a PhD. And as well, the business world is very different from the rest of the world. So I would like to hear that part, especially financial as well. Can you tell us a bit that, especially being German, studying in the US in Harvard, and as well all these different things, like you said, the experience with the business world and the different areas?
Germany, we are not, I would say on average, we are absolutely not risk seeking. So all the friends I went to school with, that I studied with, I mean, everyone was basically looking for a corporate job somewhere where you have your fixed earning, where you have a certain degree of security. And yes, where there is like a structure around you that also protects you from risks. Like you have your insurance covered and you have your holidays, you have like all of those security items integrated. For me, it was always different. Maybe it is also because my father also founded a company when he was young. My dream was always to found something, to do something from scratch, to build something. Um, and I think this is where the German environment is not ideal. Because to give you an example, if you found a startup in Germany and you fail with the startup, then everyone is pointing at you and said, yeah, he should have gone with his corporate job because he was failing. In the US, for example, they would say, great, you failed because now you have learnings, now you can create your new startup. And for example, the average Silicon Valley millionaire is 40 years old and has already founded 5 startups. So on average, those millionaires, they failed with 3 startups before. And I think this is something which I would not only say is a German problem. I think it's a continental European problem. I would maybe exclude England, Britain to a certain extent, but I think it's a problem that we are having in general in Europe. And it also has to do, I think, with how venture capital money is getting deployed, because the tickets are way smaller. Normally, it's very, very KPI driven in a traditional way. So they are looking for revenues, they are looking for customer numbers and stuff like that. And the KPI Silicon Valley companies, for example, are looking for are completely different. They think big, they have a huge vision, and they go in with huge tickets to support this vision because they have a huge trust in the team and the area they are working with. And also ourselves, I mean, we also invested into blockchain startups, and I'm also a business angel. For me, when I look at companies, I don't necessarily look at the financial model or whatever. I look at the team and I look at the industry, because I think a great team and a great industry will always succeed somehow, because you can pivot 10 times, yeah, in 2 years. That's absolutely possible. And I think this is the major difference maybe between the US and I would say continental Europe, that we are less risk seeking here. And for me, it was also extremely important to get my first experiences in the corporate world, because you have to know how these companies are working, and then also to see how a startup is getting created. This is why I joined the company builder, to actually create startups from scratch without it being my own startup. And yes, now I founded Iconic 4 years ago. I founded now another startup in the health tech space, which is still on stealth mode. And I'm very active as a business angel. So I love the startup environment. I love everything that it offers, and I would encourage more people to do so.
No, I think I subscribe 100%. And even here in the UK, although in the last, especially 5, 6 years, there's a much more culture related with startups, especially since London Tech City and Startup UK started. But the point as well is that, and actually you have to separate London from the UK. So
Yeah.
there's a bit more of attitude towards entrepreneurship, but still the problem is the same. And as well, me being Portuguese and a bit French, I completely subscribe with you. And I think you're right a bit about people are afraid of entrepreneurs. And I think that's why Europe is dying as a business continent. If you look at most of the business thrive and as well the success of the world economy, Europe is really getting, not, we still have a lot of things, but we're having a lot of issues as well. So this is key, especially in a future and present that is getting out of the conventional corporate conventional job for life, which doesn't exist anymore. So I would like to go. So before we go to your companies, and I would like just one question that I think I'm particularly interested. So as someone that has been bridging both the corporate and investment world, and as well the startup and technology world, and then as well the blockchain and tech world. So this is kind of very different worlds. So I would like to see how you've been ping-ponging from this, and as well, how do you make the bridge between these three worlds? Because they complement each other, but they're very different at the same time.
Yeah, they're absolutely different. I mean, when I worked in consulting, I was in a suit every day and I wore a tie every day. I mean, this is only like one out of 10,000 examples how they are different. And also, the good thing is now at Iconic, I can combine all of those because we are investing into startups. We are a growth company in the financial industry, but we are also talking to the towers behind me. Yeah. So I think you have to combine all of this knowledge. But for me, the way startups operate is way more efficient and fast. And I think this is actually the biggest benefit because you have less budget, you have less people, but you're way more flexible and you're quicker. I mean, if we have a meeting, for example, if we schedule a meeting with an asset manager, we would normally schedule maybe 45 or maybe 60 minutes because I think everything is set within 45 or 60 minutes. If something great comes out of it, then you can still schedule something for 2 or 3 hours. And in the corporate world, for example, they would always go like for a 3-hour meeting where like 10 parties are involved and it's not efficient at all. I think this is a huge difference for me. And then also the mindset. I mean, the people you're meeting. If you are in the corporate world, on average, there's a higher level of risk aversion and less passion for it. Because every founder I meet, it doesn't matter if this is in Germany, in France, in Portugal, or in the US, they are normally very, very passionate about what they are doing. And they never say, I'm working too much, for example. Also for me, it doesn't matter if I work at 2 o'clock at night and then at 6 o'clock in the morning again, because it's always fun. It's part of my life and I love what I'm doing. And I think this separation of working and living is outdated.
Although we are saying this, and for us is a common sense, I think the society around us is not still there. And I think we have a big challenge to go. So I want to touch, I want to go to Iconic Holding, which is the biggest thing, but as well from your career. And you mentioned that you were in some companies with $40 billion in assets. And as well, we work in private equity. Do you want to just give a bit of context? Because I think German is it's more well known probably because of its engineering and automobile industries, but it's quite strong as well in investment and private equity. And as well, Frankfurt, where you are, is one of the biggest financial centers in the world. And I think right now with the massive, I don't know, I'm a huge critic of Brexit. But I think with the Brexit, I think Germany is going to be probably skyrocket out of this. So a bit of your background on these areas, I think it's interesting for our audience and even for people that want to know more about you.
Yeah, absolutely. I mean, still, if you look at private equity funds, for example, I mean, most of them are still located out of London, yeah, within Europe, or they're primarily in the US. Then you have a lot in Luxembourg, of course, and a few in France. I was working on the fund of funds level. So actually we due diligence, not the targets, not the underlying companies. We were due diligent the different private equity strategies. So we were looking at distressed debt funds. We were looking at turnaround funds, at leverage buyout funds, management buyout funds, and then actually combined different funds into a fund of fund vehicle, then offered you a more diverse sample of private equity strategies. I think Frankfurt is a great place to be because here is a lot of capital. You have a lot of family offices here. You have the asset managers, and private equity, I think, is slowly also becoming more important. Because I think also, to come back to your question before, if you look at the mindset in the US and the mindset in Europe, you just have to look at our very different investment models. The endowment model, for example, that you have in the US, that is one of the most successful investment models of the last decades, has a huge allocation to alternative assets. So you have a huge allocation to private equity, you have a good allocation to venture capital, you invest into commodities, infrastructure, hedge funds. Normally, a traditional German, well-balanced portfolio would have stocks, bonds, real estate, gold, and that's it. So I think that's also a huge difference. But this is slowly changing. Also, we have another startup here, it's called Moonfair, where you can invest on their platform with comparably small tickets into private equity vehicles. So I think also this space is changing. And I mean, the ultimate goal for me is that you have a liquid market for illiquid assets. And this, of course, later we will probably touch on that, because with the help of blockchain and tokenization, of course, we will be able to make those illiquid asset classes liquid and create a market for it. And I think this will increase investment inflow significantly.
Yeah, it's a big challenge that we're facing right now. And I think especially this brings me to my next question, that is about Iconic Holding. So Iconic Holding is particular, cutting edge, because you are a global crypto asset management headquartered precisely in Frankfurt, but as well with office in Singapore and New York. And as well, you've been a bit of the world's first decentralized venture capital group, and award-winning as well blockchain accelerator program. So you've been touching a lot of different things, from crypto to blockchain, which is completely different things, but complementary. And as well, a trading and asset management that uses both conventional assets and non-conventional assets. So we are in the middle of another crazy push towards Bitcoin in particular, and crypto that it still didn't reach the craziness of 2017, especially the entire crypto world, because in 2017 we went to 700 billion. Now we're still in 500, but the Bitcoin actually passed the benchmark, I think the biggest price so far. So how do you see this kind of evolution, especially, and what is Iconic Holding for people that, that's two questions here, sorry, I want to separate. But I think the first one is, what is Iconic Holding? And the second, a bit of the context, how you make the bridge between crypto and the most part of the VC, and they make the bridge between this.
Yeah. So Iconic Holding is divided into 3 different business areas, I would say. The first one is Iconic Lab. Iconic Lab is an early stage blockchain investor. We invested into 11 blockchain startups there, completely industry agnostic. So you just have to use blockchain in an industry where we believe it will make a huge difference. This could be the utility space, this could be supply chain, this could be data monetization, that could be health, that could be real estate, or this could be trade finance, for example. I think there are a lot of industries where the use of blockchain makes a lot of sense. We invested into 11 startups so far. Out of them, 10 were very successful and also raised money in their Series A rounds. In total, they raised more than 30 million euros after we invested into them. Our latest investment was this year Captain Bitcoin from the UK. And yes, we invest off balance sheet. So we invest tickets between 50 and 150,000 from our own balance sheet. and we might change it in the future to a limited partner structure because we have a very, very good track record. And I think blockchain is still a very, very hot topic to invest in, especially in the industry and for mass adoption. The second business unit we are having, or the second entity, is Iconic Funds. Is our primary focus at the moment. What we are doing there is we create traditional financial vehicles that have crypto as an underlying. One example is, for example, our crypto index fund that we have in Malta, which invests into the top 20 cryptocurrencies by market capitalization. And then we have a few other products that are at the moment in the approval process here with the BaFin, with the German regulator, and will be exchange traded in Frankfurt. So what we are trying there to give you, or the general vision, is to make crypto assets accessible in a secure way to everyone on the world who has a bank account, basically. Because the people, if you now take like 50, 60, 70-year-old people, they would rather invest into a fund structure that they already know from their equities, maybe from bonds, instead of signing up at a crypto exchange at Binance and to buy Bitcoin directly. And also, they probably wouldn't be able to create a wallet infrastructure that is needed for it. The third piece is what we call the multi-manager. It's based out of New York. And basically the licenses and the infrastructure we are having in crypto, we are licensing it out to external asset managers that they can, so that they can launch their crypto quant strategies through our platform. So far we have on board, we have due diligence 50 asset managers that wanted to go through our platform. And we have just onboarded 2, Napoleon and Blue Sky, that are 2 hedge fund strategies that are launching through our infrastructure and provide hedge fund strategies in the crypto space. So in general, early stage investments, passive exposure through our own investment vehicles, and active hedging exposure through external asset managers that issue through our platform.
Very impressive. So one of the questions I have, being a German company with a global footprint, how do you manage with the regulatory part of that? Because I know that right now, well, we are a bit in the bridge that finally big banks and big regulators are starting to accept crypto, but until now, I recall just 1 year or 2 years ago, you would go to a bank and mention that you work with blockchain, it would be blocked. Although even the bank would be probably work on blockchain. So how do you manage? And I know that Germany is still very risk averse, although there's a lot of case studies of, especially fintech and blockchain. Actually, I've been working and investing in some companies over there, but I know that Germany is probably the most, special on data, is the most privacy sensitive country in the world. And there's all the regulatory part, although it's quite open, is still very conservative. So a bit, how do you manage all these different things?
Actually, this is something, this also goes back to your question with differences between the US and Europe. And actually why I'm still optimistic for Europe is exactly because of crypto and fintech, because we have 2 competitive advantages, in my opinion, that are extremely important. The one is open banking through PSD2. We can create startups here that have access through APIs to all of your insurance products, banking products, and so on. We can create things that would never be able in the US because we have that open banking API structure through PSD2. The second piece is Germany is the first big regulator in the world who actually gives you a crypto custody license if you are a bank. And this is like the step that makes crypto institutional grade. Because if your bank actually is allowed to store your cryptos and has a license for it, then it's really getting interesting for institutional investors. So I actually believe through crypto, or through the crypto custody license and through open banking, actually in Europe, or in this case, in Europe or in Germany, we have actually severe competitive advantage over the US. And I would encourage everyone to also play this regulatory arbitrage that we can do there. In the US, I mean, if you look for example, at investment vehicles for cryptos, you just have the trusts, like a Grayscale trust and stuff like that, that are not, I mean, compared to an exchange traded product here on Xetra, on the German stock exchange, it's not a good product. So I think we really have advantages here, and I think we can definitely leverage that situation. And that's why my co-managing partner and co-founder, Pat, he's from the US, for example. He normally sits here on the other side. And he's also very, very happy that we are in Germany. We could do, or we are doing a lot of stuff in the US, but at the moment we are actually extremely happy to be in Germany.
Oh, that's very positive, and I like always a positive focus because it's what we need that more than ever. But it's great as well. I know that Germany is a highly innovative country, and as well in terms of patents, I think is #1 in the world or something like that. And as well in terms of, I know fintech, Berlin has been one of the centers for fintech innovation worldwide, and they mentioned open banking is particularly interesting. So I want to touch two things before I want to go a bit more on blockchain and crypto. So in terms of you mentioned that you've been investing in a lot of companies, a lot of startups, and as well a lot of vehicles. Anything you want to mention? You touched one or two, but any specific case studies that you want to highlight to our audience, or any career highlights with your investment that have proved quite some success as well for people to understand some potential fast-growing companies over there in Germany or coming back from your lab?
I'm a huge proponent of what I call theme investing. So I mean, my best investments were always when I was extremely convinced of a certain industry or a certain area and then got passive exposure to it. So for example, I'm a huge fan of hydrogen. For example, I believe that one day, or even in the near future, we will have trucks, we will have ships, at a certain point, maybe even cars that are driving with hydrogen. And I believe that's our future. So 1.5 years ago, I said, okay, how can I get exposure to that space? And I looked at certificates, I looked at indices, and then I found an index which actually covers the 10 biggest companies in the hydrogen sector for e-mobility. And I invested into it, and it made me now, within the last 12 months, it made me 200%. So I think this is a good example of, I'm not an expert in hydrogen per se. I cannot evaluate the single companies, but I'm extremely, on a macro level, I'm extremely convinced of the space. And this is why I get passive exposure through an index product on it. And that went very well. And the same with crypto. I work in crypto every day. I have, of course, opinions to certain coins. But at the end of the day, I believe in crypto in general. I believe in Bitcoin as gold. I believe in Ethereum as an infrastructure. I believe in to a lot of more coins, and that's why I decided to put all my money personally into a passive product that covers the top 20 cryptocurrencies. So my advice here for, let's say, liquid assets is be convinced on a macroeconomic level on a certain development or a certain trend that is happening, and then try to find passive, diverse exposure to that field with low fees. That would be my suggestion. On the business angel side, I look into all industries where I believe there's a lot of potential. So personally, if you ask me about my favorite topics for the next 10 years, I would say it's definitely in the genetic space, CRISPR. For me, it's absolutely the microbiome in the health sector. It's definitely for me crypto, and it's hydrogen. That are like the 4 topics. If I had to close my eyes and just leave the money somewhere for 10 years, I think this would be the 4 areas where I would be investing.
Very interesting, and these 4 areas definitely that I kind of correlate as well. So one thing related to your crypto and the portfolio they've been doing, and especially as someone that is quite an expert in crypto. So we are among a new, let's say, spring of crypto. I don't know what name we can use it, but we are still having a lot of different velocities. So we have Ethereum in one end coming up with hopefully a new variation. We have Bitcoin, of course, in its bigger moment in history, and we have a lot of other coins that are growing. So do you want to give us a bit of your kind of probably a bit of I don't know if you want to just 1 minute or so or 2, but a bit of an overview. How do you see the crypto world at the moment, especially someone that has been on it for a long time?
I think we have like in 2017, in my opinion, it was a hype because a lot of value was driven through ICOs. It was a lot of speculation. There were a lot of kind of gamblers also in the market. I think what we are seeing at the moment, this crypto spring, if you want to call it that way, is much more sustainable. We really see demand from family offices, from high net worth individuals, even from pension funds and from publicly traded companies. I mean, if you go, for example, on Bitcoin treasuries.org, you see all the listed companies that actually own Bitcoin at the moment. We are printing so much money, fiat money in the world, in the US and in Europe. I think it's the perfect hedge on every balance sheet against this inflation that will come sooner or later. That's the one piece. And then we can deep dive into that later if you want. But to keep it short here, the certain or the different crypto assets have very, very distinct value drivers. Bitcoin for me, for example, is digital gold. And then, yeah, we can talk about the value drivers later. But I believe that there are very distinct value drivers and they are kicking in slowly because crypto is getting more adoption worldwide.
Okay, but I want to as well, because there's not every day that I have an expert in crypto like you. So in terms of crypto, so just on this, and I think I'm particularly interested to hear your opinion. So we have Bitcoin passing almost the $20,000, or at least close to that. I don't know if it's today or so, but it's been a bit steady into the 19,000 right now. So do you think really we're going to continue that is sustainable going? Because there's a lot of people talking about 100,000. And of course, from a scarcity, it makes sense eventually that Bitcoin will become bigger. But at the same time, we need to look at, okay, we have a paradox that we have right now 3 levels of economics. We have the economics of crypto, we have the economics of commodities and all the different things. And then we have the economics of the print money, which is a big systemic risk because of course we cannot just go, well, we can print all the money in the world as long as there's trust. And as long as our governments have a bit of a common sense, but sometimes there's not so much on politics. So how do you see these 3 worlds, and especially the Bitcoin and the crypto, any other coins that you want to highlight? You touched some of them, but do you think we're going to have $100,000 Bitcoin? It from a logic makes sense, but I just want to hear your opinion. And as well, these 3 levels of the economics financial world we are in.
Yeah. I mean, since I'm working in this space, I always say, I mean, I am biased at the end of the day because I am surrounded by people that feel very, very optimistic about crypto. This is why I actually want to start the answer with the stock to flow model, because I think that's very interesting here. For me, and I think for most of the people, Bitcoin compares best to a commodity because it has a scarcity. Some Bitcoin are still getting mined, and there's a global circulating supply that we have at the moment. The stock to flow ratio traditionally is used for gold and other rare metals and earths. What it says is, just to give you an example, let's say every year we find 1,000 tons of gold in the earth. And let's say there is 1 million tons of gold all over the planet. Then the stock to flow ratio would be 1,000 because it would need exactly 1,000 years until the current circulating supply would get out of the earth, if this was understandable. And with Bitcoin, it's the exact same thing. I mean, a few years ago, we had like every 10 minutes, 50 Bitcoin are getting mined. Then 25 Bitcoin are getting mined every 10 minutes. Then 12.5 Bitcoin got mined every 10 minutes. And now actually at the moment, only 6.25 Bitcoin are getting mined every 10 minutes. And the interesting thing is now that you can exactly calculate the stock to flow ratio because we know the circulating supply of Bitcoin. It's very transparent. It's around, I don't know, maybe 18.5 million at the moment. And we know every 10 minutes there are 6.25 additional Bitcoin coming. And now there comes a very interesting point. Since 2011, Bitcoin is more or less following the stock to flow ratio, always. The prices we are seeing at the moment are exactly according to stock to flow ratio. And now if you calculate the stock to flow ratio for the next years, we should go first to like $200,000 for Bitcoin. And then according to the model, this is not my own projection, but according to the model, we should also pass $1 million per Bitcoin if it follows the stock to flow ratio, what it did for the last 8 years, to be honest. And that is very, very interesting because for me, it is a commodity, and I think it's best compared to a commodity. And you have historic data that actually prove that it was following the stock to flow ratio before. And now even big banks like JP Morgan, Deutsche Bank, and so on also tell you, okay, probably it is fair traded at 150,000 by the end of 2021. And I think that's extremely interesting. So this is the value driver of Bitcoin itself. If you then look at Ethereum, just to give maybe one more example of another cryptocurrency, completely different mechanics, completely different value drivers. Ethereum is a platform where you would create smart contracts and decentralized applications. The more, and for me, it best compares to, for example, a mobile operating system. The more developers you have on your infrastructure and the more apps, or in this instance, decentralized applications, get created there, the more users you have. The more users you have, the more developers will develop things on the infrastructure. And at the moment, it looks like Ethereum is the winner here, especially with Ethereum 2 getting deployed and more scalability. I believe that Ethereum will be the infrastructure with decentralized applications and smart contracts. And this, and with every transaction in any application that is deployed on Ethereum, we will use gas, and gas is driving the Ether value. This is the intrinsic value driver of Ethereum. So very different value drivers, but yes, they are there, and this is why I think that the increase at the moment, the development is actually very healthy.
No, that's very interesting, and I agree with you. I think from a theoretical perspective, is completely yeah, the sky's the limit. But of course, the reality is a bit more complex, and we are in a lot of things. So I would like to talk about blockchain, and of course, you are an expert as well. That there's the blockchain technology. So that's my point. That we discussed crypto. I would like to go for that. So you guys in the company, you've been working a lot, especially Conic Holding, in blockchain solutions, and you mentioned all different verticals. So how do you see the blockchain technology, and as well a bit of evolution, especially because you've been on it for a while?
Mm-hmm. Yeah, so blockchain, let's say blockchain one, that was Bitcoin. It was it was designed to transfer value from A to B without an intermediary. That's already cool, because normally if I send you money, there is a bank in between, you have a clearinghouse, you have a settlement, you have so many things in between, so many intermediaries, and yet now you don't need them anymore. The technology by default does clearing and settlement. That's the good news. And that was Bitcoin. The next evolution was, at least in my definition, was Ethereum, because Ethereum now allowed you to not only in one direction transfer value, but at the same time, we have a smart contract in the middle, which works like a trust. And the counterparty can now send an asset, like a house, for example, real estate or something, or a car, to the trust. And then only if the trust receives the money and the asset, then actually it's getting exchanged with each other. So this was for me like generation 2. Generation 3 for me is what will happen now with Ethereum 2, and what from a scalability point of view, for example, EOS can also do, is to build like Pokemon, for example, or Monopoly on blockchain. That you really can do whole applications and marketplaces on blockchain. That's for me the third evolution. That's maybe very quick the history, how I view it. When it comes to industries and verticals, I mean, for me, tokenization is still the biggest use case of blockchain technology, because if you sum up all assets on the whole, all global assets, we are talking about 508 trillion in assets that could get tokenized, including real estate, art, stocks, bonds, fiat money, everything. And that's just the biggest use case by far. What use cases I love, where I'm passionate about, is, for example, the health space, because centralized health apps so far, they never worked, because you give your data, let's say to Google, for example, your health data, and you know it's getting monetized behind your back. They will share it with insurance companies, they will share it with advertisements, they will share it with everyone, which is fine. I don't blame Google for it. That's their business model. It's fine. But this is why a centralized health data never worked. if my health data is now decrypted on blockchain, for example, and is private there, and I have the possibility to monetize it through a smart contract with different parties based on my personal views, then I think we are running in a world where I have full control over my own data. To give you an example, I could now share my health data, let's say, with an insurance company. And I say, okay, if you meet the threshold of, let's say, 89 euro, then you can have my data and you can monetize it. You can make me an offer for my insurance. But for example, if now the German Cancer Research Institute in Heidelberg wants to use my data, I say, you don't need to pay me money. You can have my data. It's fine. I know you're doing research with it. I know I'm having an impact and doing something positive for the world. So I think control of your own data is one of the coolest use cases of blockchain technology. Another thing or another industry or vertical is supply chain. I believe in the supply chain, it's a huge use case. Let's say your bananas that are getting imported from Morocco to, let's say, Lisbon, for example, because you're in Portugal. Today,
I actually in London.
Or London, yeah, London. The bananas get there, and today you would just trust the shipping company that they say, yeah, the containers, they had 16 degrees, for example. Yeah, it was measured, I saw it, yeah, it was 16 degrees, and okay, yeah, that's fine. But instead, today, you can put an NFC chip there who's always sending the data in every second from the container to a blockchain and saves the data there. Was it always actually transported at 16 degrees? And this is like through the help of, we call it smart oracles. The NFC chip in this instance is a smart oracle because it's the oracle that brings data on the chain. It's a hardware oracle. We have also software oracles that would be API keys, for example, that could send money to the blockchain. And the third thing we are having is actually the use case of Chainlink, another top 10 cryptocurrency, is a consensus oracle. So basically there has to be a consensus before data gets on the blockchain. And I think that's extremely interesting in the supply chain space to see how smart oracles can put trusted data onto blockchain, and then on the blockchain, it's immutable, it's trusted, it's not hackable. And I think then we are having a very, very transparent world and a very clean supply chain.
No, I'm completely with you, and I think this is going to be. But I think one question, I don't want to go too technical, but is a passion of mine. The challenge is the governance, because in order to create this, we need to have an international, global governance that we don't have right now. So being you on working with a lot of regulators in asset management, hedge funds, how do you see that? Because the point is that at the moment, the governments don't agree with anything, and we have a big challenge. So that means if, let's say, your iconic holding creates a solution to make the supply chain between UK, German, where I am, and you where you are, it's still a big complex, but this has to make a digitization of, like I said, we have to tokenize not only the assets, but as well all the regulatory parts, and as well we need to find the balance between these different countries, because you cannot just, I think I know that a lot of liberals, especially in the US, they think they can work without countries, but we still need countries. So how do you see that part?
Yeah, first of all, yes, I'm not the burn the governments kind of guy. I personally, I have trust into governments to a certain extent, and I also have trust to a certain extent into our central banks. And for example, money printing and the buyback of corporate and national bonds, for example, they all make sense from a macroeconomic point of view. But still, I think it's not healthy what we have done to our balance sheets in the last 20 years. I think it's very, very unhealthy. And I personally would recommend everyone to hedge at least a certain percentage, for example, in cryptos. But this was not your major question. Your major question was, of course, blockchain regulation. What makes me sad, especially in Europe, is we have some frameworks like GDPR, for example, or PSD2 that are Europe-wide. And that's perfect because every country has the same rules. We can work on common solutions. We can work on common businesses. Every startup in every country has the same chance with the same regulatory environment. But then we're coming to, let's say, real estate. Real estate is different in Germany, it's different in Portugal, different in Spain, it's different everywhere because we just have everywhere our national regulation around it. And that's what makes it so difficult to tokenize real estate because our data is extremely heterogeneous and the regulation in the countries is very, very different from each other. And that's a huge problem. I mean, for crypto, it's not the biggest, or for financial assets in general, it's not the biggest problem because every financial vehicle you create, you can get it approved in one EU country, for example, and then passport it to the union. That's fine. But for things where it's really about national law, about things that are different from country to country, you cannot really scale it. And that's a huge issue, especially in the field of blockchain. Because, yeah, this is just not going well. I believe that the European Union should have everywhere standardized regulation. That's my personal view.
I subscribe completely, and I think you're right that we need to make a bridge between governments and non-governments and create a balance, especially as the digital transformation and we create digital twins of all society. Because I think the challenge is that if you synthesize and summarize this blockchain technology, is first of all a digital twin or a technology that enables a digitalization of our society. But it's a long discussion. We might have a second call on that. So I want to wrap up, and we've been passing 1 hour. It's been fascinating, and I have a lot of things to ask you. So I will probably just 2 more questions, and then probably I will probably want to have a second one, but I know that you're going to be in some summits and things like that. So one of the things is, so being someone that is on the cutting edge between finance, investment, trading, and as well innovation and investing in startups and creating a lot of solutions. How do you see, especially the challenge we're facing with digital transformation, which we touched partly, but as well, especially with COVID-19 and all this, in one end, all the debt that is coming out of this, and as well the damage, destruction of, for instance, in the UK, I think the bump was announced yesterday by the UK government that is the worst in 300 years, which is worse than the Second World War and the First World War, to say less. And of course, I think this is kind of very clear numbers, but this is affecting all the world economy. So in one end, companies like ours are strong because of digital, but everyone is facing, and no one knows what is going to happen because printing money only can go until a certain point. So I'd like to hear, in one end, digital transformation, in one end, the money part that we are right now going for all the challenge, but as well, in large society, all this challenge, how do you see this?
Oh, where to start, huh?
Yeah, just try to summarize. I understand it's a big one.
Yeah, I mean, let's start maybe on a high level. The Corona pandemic, and I think the results of it are very, very bad. We printed so much money all over the globe. We have so much debt. And I think what we are giving to our next generations here is absolutely irresponsible. It's irresponsible that my children, my grandchildren actually have to live with the debts that we created, that our generation now unfortunately created. Yeah. So I think that's very, very bad. But what I like, I mean, if you see, for example, innovative startups that that were created like in the last 20 years, it was always when there was a crisis. And that's very cool. I think now is your chance, I mean, for everyone to actually create something special. And I believe if you look at the funding, for example, the venture capital funds now receive huge funding in the US and Europe because everyone knows, okay, now it's again time for probably big innovations and for revolutions. And I would encourage people to definitely look at the digital health sector because now the people have seen, first of all, how important health is and how important it is not, our capacity is limited. And we have to find, to a certain extent, a digital way to deal with our health. And I think this is going to be a huge thing. And to give you another example is, for example, I'm sitting in the supervisory board of MLP, which is the biggest independent financial advisor in Germany. And by coincidence, more or less, the digital advising tool was implemented in January. So actually through Corona now, the people had to use it because you could not meet people anymore. So you had to actually do all of that stuff on your computer. So it was actually extremely beneficial for the company that something like this was introduced and directly used because the people had to use it. So I think now a lot of people who didn't want to deal with digitalization in the last years now had to deal with it. And I think that's why we will come out of Corona, I think, stronger, at least in this area. I think to mention a negative side effect, a lot of companies, and everyone I think should be aware of that, a lot of companies will be bankrupt soon. This is just a fact. I mean, at the moment, in the US especially, they're giving huge amounts to companies to let them somehow survive, but they are zombie companies. They are zombie companies. Actually, they will be bankrupt. If it's in 12 months or now, it doesn't matter. And the stock markets are severely, in my opinion, overvalued. Because at the moment, this is not priced in at all. We are seeing all-time highs of NASDAQ and Dow Jones continuously. And actually, we will see a lot of companies that will have severe issues, in my opinion.
I'm completely with you. I think it's really an interesting one. And I think, yeah, it's quite dangerous as well. But I think the point is how we get out of this stronger, like you said, and more optimistic. So as my last part, so MLP is a bank as well, and you have been involved in a lot of different financial parts. So from your present companies, I don't know if you want to highlight a bit some of the things for our audience, and especially from the banking perspective. We didn't touch that too much, but that is more top level. I don't know if you want to be being part of that bank and the other things, if you want to highlight as well, being in a traditional, at least a bank that as well is, in one end, you have like the head of the bank and the head of the startups and the fintechs and the open banking.
First of all, you have to understand the German two-tier system. So a supervisory board is not the management board, but it's also not the advisory board. So actually we are not there to give like deep advice, for example. Yeah. Supervisory board is more to supervise the company, to control the numbers. It's an additional security mechanism. So actually I have no operational role in the company. It's very, very clearly a supervisory role. What I find extremely interesting, because MLP is a financial advisor, and it's also a bank. And of course, it's targeting very young or pretty young academics. So people who studied law, who studied medicine, who studied business, for example. And I'm seeing all the fintech trends at the moment. I'm seeing what's going on the market. And of course, I can always give, I hope, at least valuable input from what I'm seeing at the market. And just to give you one example, I mean, that's one thing I'm 100% convinced of. If you're a student or a young academic, you want to create your own wealth slowly and in a smart way. This might be 100 euro per month, for example. And this 100 euro per month, for example, I think it's not wise to advise now to only put it into stocks or only into gold or only into anything. I think it's already with 100 euro per month, I think you should be diversified. And with tokenization, the beauty is that something like real estate, you can invest maybe with €7.50 per month into real estate. Then maybe €22.50 go to Asian stocks. Another part go maybe to US stocks. And for me also, maybe 1 or 2% of that 100 euro go into crypto. So this is, I think, where like the startup and crypto tokenized world and the corporate world actually come together, that you just can give a much better user experience and much more diversification to your customers. And I think that's very, very important.
No, completely, I subscribe. So last thing, and appreciating we're passing 1 hour. Now we'll try to keep it for 1 hour, but definitely I will want to make a second one more on crypto and all the areas of innovation that you have. So as a leader, so as a leader of Iconic Holding, and as well a strong ecosystem of companies that benchmarks with a lot of different areas that are cutting edge, what do you suggest? And as well, can you give highlights for people looking at us and as well listening to you and your organization companies, and some advice, but as well some of the things that you suggest or that people can actually get in contact with you?
Our vision on a very high level is that every every asset of the world will be tokenized. Technologically, that's already possible today. Then we have some issues like regulation, and of course it takes some time, but I believe until 2025 or 2030, all assets in the world will be tokenized. And this includes, again, real estate, this includes art, this might also include your, let's say, your special sword in World of Warcraft or something like that. Everything on the world which has a value to you, I believe will be tokenized, and we will create a global 100% fungible and fractionalized market. And that's so beautiful, because now I cannot, today I have an Amazon share, I sell it to euro, then I take my euro and I might buy some Bitcoin, then I go out of Bitcoin, I take my euro again, then I might pay my rent with it, and so on. But in a world where central bank digital currencies are on blockchain, in a world where my Picasso painting, which I don't have, just for the record, is tokenized, I can now just on the global fungible market, I can exchange maybe 1% of a Picasso painting against 107 Tesla shares. I can exchange maybe 1 square meter of my flat with maybe 0.5 Bitcoin. I can really trade everything with everything, and even the fiat money will be put on blockchain, and we never have to leave this ecosystem again. And in this future, also today 70% of the world population still don't have access to financial infrastructure. It's incredible. And in this future, there's no more barrier, because there is no bank controlling it, and everyone can take part in this global 100% fungible market. And I think that's the real beauty about blockchain, that no one in this world is financially excluded anymore. I mean, of course, we could talk about economic exclusion and politic exclusion. This will still exist. You cannot change this with technology. But financial exclusion doesn't exist in this future anymore, and everyone can be part of our financial system. And this is the vision, I think, for iconic crypto and where we are moving. And I believe that blockchain also will provide a lot of transparency in the supply chain. Customer clients will have much more control of their data. I think, I think Snowden would also like that future in terms of data privacy and stuff like that. And how you can reach out, I mean, you can always of course drop me an email to maxlautenschläger@iconicholding.com. Maybe you can share that with your audience if you have any questions. We have a lot of great research reports about crypto and blockchain. I can definitely recommend checking out our website and read those research reports. I also share articles quite often where I write about crypto assets in particular. And yes, if there are any questions, just reach out to me.
Thank you so much, Max. It's been a fantastic, I have a lot of other questions, but I'll take it for a second round. I thank you for your time. It's congratulations for your excellent work, and as well for your passion to celebrate and as well to push things forward in a very practical and coherent way, because sometimes that's the challenge. Is a lot of people have the vision, but they cannot put it in practice.
Thanks, Dinis.
No, it's been an honor. Thank you so much. We'll put all links to all the things you mentioned and for your website and research, both on the YouTube channel and the other channels. Thank you so much. Wish you a great day.
Thanks a lot. Have a great day. Bye-bye.